Welcome to Iraqi Dinar, where we go beyond the surface numbers and uncover the deeper story shaping Iraq's currency market. If you think a movement of 50 or 100 dinars does not matter, today's analysis may change your perspective. In currency markets, the smallest shifts can sometimes signal the most important underlying trends. What happened in Thursday's trading session may look minor at first glance, but when we examine the full picture, it reveals valuable insight into stability, liquidity, and market psychology inside Iraq. On Thursday, the US dollar closed trading in Iraq slightly lower, hovering around 154,000 dinars per $100. According to local Iraqi Dinar market survey, the dollar was traded in Baghdad's Al-Khifa and Al-Harithia exchanges at 153,750 dinars per $100, compared to the previous session's 153,800 dinars. At first glance, a 50 dinar difference appears insignificant. However, in a tightly managed currency environment like Iraq's, even small changes can reflect important supply and demand adjustments behind the scenes. In Baghdad's exchange shops, the dollar was sold at 154,250 dinars per $100 and bought at 153,250 dinars. This creates a spread of approximately 1,000 dinars between buying and selling prices. The spread itself is a key indicator. When spreads widen, it often suggests caution among traders, reduced liquidity, or uncertainty about short-term direction. Dealers protect themselves by increasing margins. When spreads narrow, it typically signals stronger confidence and smoother dollar availability. Meanwhile, in Erbil, the regional capital of the Kurdistan area, selling prices stood at 152,600 dinars per $100, while at 152,550 dinars. The spread there was only about 50 dinars, dramatically tighter than in Baghdad. This contrast is noteworthy. A narrow spread often reflects balanced supply and demand conditions or stronger liquidity in that specific region. The difference between Baghdad and Erbil suggests regional variations in dollar access, demand patterns, or local trading behavior. Now, the bigger question arises, is this decline in the dollar's value meaningful, or is it simply routine fluctuation within a controlled range? To answer that, we must look at recent trends. Over the past several weeks, the dollar has largely traded within a defined band between approximately 154,500 dinars per $100. This range has become psychologically significant for traders. When rates approach the upper boundary, selling pressure increases. When rates move toward the lower boundary, buyers step in. Such range-bound movement often indicates a market waiting for a catalyst before breaking decisively in one direction. Iraq's currency market is not purely free-floating. The Central Bank of Iraq plays a significant role in influencing dollar supply through official mechanisms, including currency auctions and electronic transfer platforms. Any change in official supply policy can quickly affect open market pricing. If the central bank increases dollar supply, market rates tend to soften. If supply tightens, rates rise. Thursday's slight decline could indicate a temporary increase in supply or simply a balancing of demand after recent sessions. Another important factor is market psychology. Currency markets are driven not only by hard data, but also by expectations. If traders believe that dollar inflows will remain steady, particularly from oil revenues, they are less likely to hoard dollars. Reduced hoarding lowers demand pressure, which can stabilize or slightly reduce prices. Conversely, if rumors circulate about potential supply constraints, speculative buying increases and prices climb. Oil revenue plays a foundational role in Iraq's financial structure. Since Iraq is heavily dependent on oil exports, global oil prices and export volumes directly affect the country's dollar reserves. Stable oil income strengthens the government's ability to maintain consistent dollar supply to the market. When oil revenue flows smoothly, it reduces pressure on the dinar. If oil markets experience volatility, that pressure can quickly return. The spread difference between Baghdad and Erbil deserves deeper consideration. A 1,000 dinar spread in Baghdad suggests dealers are hedging against uncertainty or adjusting for variable supply conditions. In contrast, Erbil's extremely tight 50 dinar spread suggests smoother trading conditions or greater confidence in short-term stability. If this pattern persists over time, It may reflect structural differences in liquidity channels between regions. If it is temporary, it could simply represent localized market behavior for that day. From a technical standpoint, the dollar's slight drop does not indicate panic or instability. Instead, it suggests controlled movement within a stable trading environment. Volatility remains relatively contained. There is no sign of rapid depreciation or aggressive speculation. That matters because sudden spikes often indicate structural stress, while slow, measured adjustments typically point to managed stability. That short-term traders may interpret this movement as routine noise within a sideways market. Long-term observer, however, focus on whether broader stability is being preserved. So far, the evidence suggests that Iraq's currency market remains under structured oversight. The rate continues to fluctuate within a predictable corridor, reflecting a balance between official management and open market dynamics. For dinar holders, both inside and outside Iraq, the key takeaway is that the system appears controlled rather than chaotic. There is no dramatic break from established trading patterns. Supply appears sufficient to prevent extreme upward pressure on the dollar. Demand does not seem to be surging uncontrollably. In currency markets, stability often goes unnoticed because it lacks drama, but stability is itself a powerful signal. It is also important to consider global influences. The strength of the U.S. dollar internationally, U.S. Federal Reserve policy decisions, regional geopolitical developments, and cross-border trade flows all indirectly influence Iraq's currency environment. Even if local conditions appear stable, international shifts can eventually ripple into domestic pricing structures. Another subtle indicator is the psychological round number of 154,000 dinars per $100. The markets often react around round numbers because traders use them as mental reference points. Hovering near 154,000 suggests that neither buyers nor sellers are aggressively pushing for a breakout. The market is testing equilibrium. When a currency trades in a narrow band for extended periods, it can signal one of two things. Either the system is firmly anchored by policy tools, or the market is compressing before a larger move. At present, evidence leans toward policy anchoring rather than compression. There is no surge in volatility or sudden liquidity withdrawal. Instead, there is gradual measured movement. The absence of panic is significant. In emerging markets, rapid currency shifts often trigger public concern and speculative runs. Iraq's current environment does not display those characteristics. Exchange shops continue normal operations. Spreads, while wider in Baghdad, are not extreme by historical standards. Erbil's narrow margin reinforces the idea of localized balance. Investors who focus only on headlines might read that the dollar declined and assume a broader weakening trend. But context matters. A 50 dinar movement is modest within the current range. It reflects adjustment, not transformation. Sustainable currency trends require consistent directional pressure over multiple sessions or weeks. One session's decline does not define a new trajectory. Looking ahead, the most important factors to monitor include central bank supply levels, oil revenue stability, import financing mechanisms, and regional liquidity patterns. If these remain steady, the dinar is likely to continue trading within its established corridor. A decisive breakout would require either a major policy shift or a significant external shock. Ultimately, Thursday's trading session tells a story of measured stability. The dollar eased slightly, spreads varied by region, and the overall structure remained intact. There is no evidence of disorder. There is no sign of extreme imbalance. Instead, there is a market functioning within managed boundaries. This is why on Iraqi Dinar, we emphasize depth over noise. A small move can matter not because of its size, but because of what it reveals about structure, psychology, and control. Today's decline does not signal crisis. It signals calibration. As always, informed observers understand that currency markets reward patience and data-driven thinking. Emotional reactions to minor fluctuations rarely lead to sound conclusions. The Iraqi dinar market continues to reflect cautious stability rather than dramatic transformation. Stay focused on the broader picture. Watch the spreads. Watch the range. Watch supply signals. Because in currency markets, the real story is rarely in the headline, it is in the details behind the number.